What's going on, everybody? This is Jordan with Conquer Trading and Investing, and this is our weekly Forex forecast and analysis for the upcoming week of June the 15th through the 19th. It's going to be an interesting week over here because we're seeing the battle between the bulls and the bears in full force. There's a lot of moving pieces we need to talk about. We're going to take an overview right now of what to plan ahead, what's going on in the markets, and see how we could best position ourselves. Let's take a moment here to take a look at the calendar for the week ahead, which starts off on Monday with a monetary policy statement coming from the Bank of Japan, followed by Tuesday and Wednesday with Fed Chairman Powell testifying. But also on Tuesday, we have retail sales out of the U.S. That could be a big market mover if it does come in better than expected. Watch out for that one. And then on Friday, again, we have Fed Chairman Powell speaking. It is the week of Powell. Right now, we're going to start this off with the DXY. I want you to see what happened over here. This over here was the FOMC meeting this past week, and we said going into that FOMC that we could possibly see a spike down after the announcement. If they didn't go ahead and do anything to control the yield curve, we could see a near-term bottom there in the dollar, and that so far is exactly what has happened. Since then, we've traded up, and you can see right now on Friday, we took out the resistance over here at 27.03 and currently coming back in and testing that now. That's a big level going into onto Monday, onto the open, to see whether or not the dollar holds there or if it continues to lose that level. If it loses that level, we could see some further downside pressure on the dollar. Or if it starts resuming up, at that point, we should be looking above. We should be looking at the next level at 97.90. So we're sitting on a big support level for the dollar. An important point after going ahead. And finally, we tried a few times to get above this resistance here at 97.03. Finally, we did on Friday, and we have pulled back right to test it right now. So watch the dollar. The dollar could be we could see the dollar bid the rest of this month. There's some interesting dynamics going on, including the size of the Fed's balance sheet, the size of the Treasury's balance sheet. And we're going to look at that later this week together. All right, let's take a quick look at Bitcoin. I know everyone wants a little bit closer looks at Bitcoin right now, and that's cool. Obviously, I am a big fan and a big believer, love Bitcoin. Right now, it's doing very good here, holding that first support at 9,100. Again, I continue to have orders in at 8,500 and 82. I don't know that they'll get filled. I hope they do. The question on everyone's mind is if we have another market crash, what is going to happen to Bitcoin? And that's really dependent on a couple of things. There's another question let's talk about that right now. If we have another liquidity crisis, which will be short lasting, as was the last one, because the Fed will do everything it can to fix that and go ahead and start those printing presses again and do whatever they need to do, because if they don't, the system crashes. There's no question about that. We could have another dollar liquidity crisis at some point in the future, and if we do, it won't be just Bitcoin. Everything at that point will be affected by it. No question about that. Now, if the market is able in an orderly fashion to go back and winds up going to test the March lows, that doesn't mean Bitcoin is going with it. We looked at this last weekend. I want to show you. This is when Bitcoin was trading at its all-time high or right around it. You can see the close on this price bar right here was 18,953. The S&P was trading at 2675. You go down over here, you go down to when Bitcoin was trading at now $4,000, $4,100, and the S&P is up 100 points, trading at 2760. So there's no way that Bitcoin was trading off 80% and the S&P is up, 100 points, and you could say that the two are correlated. It doesn't work like that. Over here, you could see now that the S&P is trading at 2760. Fast forward, S&P is up 200 points, and Bitcoin has had a 150% return, right? So the two are not correlated. right? People wonder what's happening right now. The institutions are getting involved. They're not involved yet. Wall Street is beginning to get involved. There is no way they're going to let the little guy get ahead of them. They're going to keep the price down. There's no way. Now they've made it so that there is a tight correlation between the equity markets and Bitcoin, and they have no chance of profiting. Listen, it's absolutely not true. Institutions, why have now on ramps such as Bakkt, the parent exchange of the New York Stock Exchange, and they have third-party custody, which will enable them to invest in Bitcoin as well as the futures markets. The thing is, until Bitcoin reaches right around $50,000, the people that are within the Bitcoin community who are involved in actually working with institutions, they believe the price is around $50,000 when institutions will begin FOMOing into Bitcoin, because at that point they will have no chance, because if they don't have a position in Bitcoin, they're not withholding their fiduciary responsibilities. They'll have no choice. That's going to propel Bitcoin. Once the institutional money comes in, forget about it. That's going to really propel Bitcoin. Listen, you have to focus on what you need to focus on. For Bitcoin, that remains the stock to flow. Over here, we've just hit. You have to focus in on the math. Here's the stock to flow of Bitcoin. We just hit the first red dot. The bull market is about to begin. You could see every past red dot is what set off the bull market. Here we are. Don't let people talk you out of your position. Bitcoin holding up extremely well, even with the pressure we saw on the markets on Friday. Listen, everything in the market is correlated at certain points. You have to look at long term. You can't look from day to day, week to week. You have to look over a period of 3, 6, 12 months to get a better idea. Bitcoin is going to continue to break this tight correlation it has had with the equity markets. We're going to see that. Yes, there's no question. There's no question that if you start seeing the stock market selling off and selling hard, that could put near-term pressure on Bitcoin. That's why we have our levels to go ahead and look to pick up further accumulation. Bitcoin has not yet started its bull market. It's getting close. I'm going to walk you through it. All right, we're going to do something a little different in this weekly Forex forecast. Instead of looking at the top down, looking at the daily time frame, we're going to be focused here on a lot of pairs on the 8-hour time frame, simply because there are a lot of setups developing in the market. Monday could be a very busy day. We have a wave of setups coming into the market. I want to take a look at what's going on and see what we could prepare for. Starting here on the euro US dollar, you could see, by the way, the market, again, is finding resistance here at this trend line over here. That is important, but the fact that then we've lost here the support at 1.1282 and are now trading below it, this brings the opportunity over here, any retests and then rejections of this broken support, holding now, hopefully, I say hopefully if you're looking for the short side, as resistance. If it does, that opens up a good short here on the euro US dollar. Do notice also the DXY we talked about was testing that important broken resistance, which now be support. If this does not hold over here and we get back up, this becomes a neutral area. This between the trend line over here, which is resistance, and then this resistance line, if that's turned to support, becomes a neutral area. Stay aside, get back above this trend line. That opens up a big move possibly to the upside. Here's right now why we're below the resistance at 1.1282, where we're looking to attack to the downside. So the euro US dollar is absolutely in play. Here's a look at the Australian dollar, Swiss franc, also in play right now. You could see this is starting to break down. If you zoom out, this continues to be a downtrend. It is now into an area of strong resistance over here. It has been rejected. This could possibly be a continuation that is forming over here of a larger move developing. You're at right now a light resistance area. I'm sorry, I need to go ahead and clean that up for you because it's important to be looking at the correct levels. All right, we're at a light resistance right now. Nevertheless, if this resistance holds and we are rejected and start resuming down, that does bring up a very nice opportunity. And it's not just there. You also have an opportunity if we rise up, if we never get an entry signal into this area over here at 0.6614. Both of these areas, I would be looking for a possible short position. If either one of those give an entry signal. Also on the Australian dollar, Japanese yen, a very similar situation forming. You could see over here, this was a possible entry signal, but we wouldn't take that on a Friday during New York session. So that was definitely avoided. Let's see what happens over here on the Asian Open. I don't know which way we're going to start. It's a very important opening. Watch what happens during Asia today. But if we hold this resistance line and even come in and test it further and then get a signal, that is another possible entry signal as far as going into Monday London session to be aware of here on the Australian dollar, Japanese yen. Now, if you are able to go ahead and break above this resistance over here, then you could be continuing to watch for buy side trades. If we get above the resistance at 74.38 and then turn that into support, that opens up a nice buy side trade and opportunity to look for. So very interesting opportunities here as we're towards an area where we could be opening up first a sell side trade. And if that doesn't trigger, it does offer a buy side opportunity. We also watched on the Euro US dollar where both of our opportunities are right now to the downside and then possibly later in leak to the upside. All right, let's move over to the Euro Australian dollar. Again, we have a couple of different possibilities developing over here. Of course, we already had an entry signal off of the trend line over here to the short side. That is, anyone holding is still continuing to hold. That trade looks good over here. Now, I want you to watch what happens this week because a couple of different trades could continue to develop over here on the Euro Australian dollar. Now, as long as we're below this trend line resistance and this horizontal resistance at 1.65, right, 1.65632, that brings opportunity on any further retest into that area to look for another short possibility. However, again, and this seems to be a theme that we're looking at today, we are at a junction where we're opening up possible both sides of the market. Get above that resistance at 1.65632, which would also be above that trend line over here. That opens up opportunity to go long here on the Euro Australian dollar. Watch out for that trade possibly developing this week. What happens if that doesn't happen? What happens if we come into this area of support over here at 1.6295? Do you take that buy side trade if that support holds and we resume up? That's very counter trend. That's not a type of trade you should be looking for. That is no indication the trend is ending. That is a counter trend trade. I would step aside personally. There's a lot of setups in the market. That's not a trade I would be looking for. However, above this trend line over here and above this pretty nice area of resistance, that would open up an opportunity to begin looking for the long side. So while we're below the trend line, while we're below that trend line resistance and below this nice area of resistance at 1.65632, we continue to look to sell into resistance until we get above there. Let's move over to the US dollar, Canadian dollar, which is taking back a very important level over here this week. It took back the 1.35216 level, this thick line of support you could see over here. Not only did it take it back, after piercing above it, it came back in technically perfect, testing it as support and is trying to resume upwards right now. If you start seeing during London any higher highs as you come in and maybe even take another look at that level of support, and if you hold it, that offers a nice opportunity here on the US dollar, Canadian dollar. Do watch out for that trade, which is very similar to what's happening on the US dollar, Mexican peso, also offering the same opportunity. Now, you do not want to take both these trades, and as you can see, there's a lot of opportunity developing in the market right now. There's a huge set of waves coming in. There's going to be active trades, it looks like, on Monday. You have to discern which of those setups to take. You don't want to be able, because you recognize a setup, take every trade possible. There's no way that you're going to be a profitable trader like that. It's a question of then discerning which setup to take, and you would not want to take both the US dollar, Mexican peso, and the US dollar, Canadian dollar, because that would be increasing your risk, as these two are very tightly correlated. You could see here also the Mexican peso take the US dollar Mexican peso taking out this important resistance level to the upside. This is where we first looked for the trade together. Everyone knew about this one once we retook this trend line right over here and then retested it. That over there opened up the buy, and that was a fantastic trade. But now it looks like it's time to look to possibly add to this trade as we've come back in and are now testing this support at 22.149 or call it 22.15. If this holds and we start making higher highs, that would mean the equity markets are probably coming off and seeing some pressure on Monday. That will offer a long opportunity over here on the US dollar Mexican peso. Let's check in on gold. Gold is looking pretty good over here. Gold is definitely maintaining its bullish bias, and as long as it's above this support over here at 1723, it continues to look very good. Now, it was under a little bit of pressure on Friday. It remains to be seen what is going to happen as the dollar, if the dollar continues to remain bid over the next couple of weeks, whether or not you will see gold, as we've seen really We've seen a lot of occasions where the dollar has been bid and gold has also been bid. And we've also seen occasions where the dollar is weak and gold has been weak. That has to do with risk on and risk off. I'm not exactly sure what the correlation will be right now if we start seeing a stronger dollar, what that is going to do to the price of gold. So we'll just follow it technically. Technically, this is a big line over here that you're looking at. This is the line in the sand, and you have a very strong bullish bias. Why above it, if you start resuming over here and making higher highs, that could be an opportunity to get into gold. Gold, even though it's not seasonally the right time for it to be making a move, fundamentally everything is going for it. Now, there's no reason to trade against gold. I've seen a lot of people getting hurt trading against gold. There's no reason to be looking to take sell-side trades in something that's in such a strong uptrend, right? And ever since down over here, ever since we broke out, look at the side. This is a super, super strong uptrend. There's nothing else to say about it. If you're looking, just look at the chart. Pretend you're asking your 5-year-old kid, is this in an up or down trend? Clearly, it's in a very strong uptrend. Looking to sell gold over here does not make any sense. Now, that's a difference between standing aside and not looking to take a position on gold and looking to go ahead and buy it. Over here above this area of 1723, any resumptions upwards looks like a possible long entry on gold. Get below it, turn a little bit neutral, and we'll wait for better opportunities to step in and to buy. What about silver? What's going on with silver? You could see that also technically it's looking very good. As long as it's holding right here where my mouse is, right around 1740, right? Or even above 1734. It's very bullish over here. Any resumption upwards is going to be a possibility at taking a buy side here, a buy side trade on silver. If we lose this level, then you stand aside on silver and you wait for further retracement and wait to step back in to build another position into silver as well. That's our look at the markets going into next week. I tried to focus on cross pairs that are set up going in onto Monday so that you're able to take advantage of any possibilities. You have to discern which of those waves you're going to ride. There is always opportunity in the markets. It's a question of doing our analysis together and finding and uncovering that opportunity and then getting in there and taking advantage of it. Speaking of which, I'll see you all tomorrow morning, 9 o'clock a.m. Eastern Time, as we go ahead and we start our live session, preparing for the session ahead and seeing what our plan is going to be and where the opportunity lies. That's it, everyone. I hope you have a beautiful day, and I look forward to sharing more with you tomorrow.